is October 31st and it's 15 minutes until 10 a.m. in London when we're doing this market update. We had an interesting day yesterday. Dollar was doing quite good at one point, but then decided to flip around and turn bearish. And today, this morning, we have a report from Bloomberg that apparently the Chinese don't believe so much in a long-term deal with the U.S. They blame President Trump's impulsiveness, and they also want to see all tariffs removed before they start to negotiate. We've seen that before, right? In the situation with North Korea's Kim Jong-un, that he literally, wants to have something before he even starts to dismantle. And remember that. I think we all forgot about that for now, but he's still around. So we're gonna talk a bit about that and that latest part, not about North Korea, but about the trade war is definitely echoing and causing issues. This is the Aussie dollar going down already from being bearish. It was bearish up until yesterday, but now it's revisiting those levels. So it's really, fortunately nowadays, and unfortunately it's good for some, it's literally one day one bias and then the other day you don't know really what can happen. Very, very random, but it is what it is. In the chat box today we have Main West. If you guys want to join me here in this little section here, it's very straightforward. Just need to create your YouTube account and then join me. It's free and you can reach out to me, ask questions, say hello as well. Don't forget to follow me on Twitter. So I'm going to send you the link here. So if anyone is watching this on somewhere else, for example YouTube, and then make sure you follow that handle. And if you're totally new to the site, this is investingcube.com. I'm the manager, the father of the site, and created this project with a very talented team. And we produce a lot of content here. So if you want to, know what's going on in the markets, make sure you become a member as well. It's totally free, gives you access to everything. All right, let's begin. And we're going to begin, and we'll begin with the euro. So the euro actually just traded above its high here, and several levels. This high, October 25th high, then you have this level here, and that actually took out that short-term bearish bias we had in this market. And there's not too much to do about it. We're up a bit because we said turn bearish from here, so we're up a bit, but then the whole thing sort of went the other way around. Thankfully, they were able to reduce the stop loss a bit, and that's what is important. Looking at this today, at least from a short-term perspective, because that's what we're trying to figure out with these here, is you still have a bit of an uptrend, right? Creating these higher and higher lows. And up here at this high, I would not be buying right now. It's very straightforward. If you buy up here, even if we reach the next high, that's 79 pip away. The market can easily go down 50% of yesterday's gains. So yeah, if you would buy here, put your stop loss here, you get 2 times the money or 2 times the risk, but we can easily touch this level. So realistically, probably need to put it, unfortunately, all the way down here somewhere. And then your risk reward ratio is less than a 1-to-1. However, if you wait for that little pullback and still want to target, then you get your 2.28. So buying up here is not a good idea. I don't think so. As for GBP, so I've been bullish here since last week, or even before that actually. But the last idea I shared with you guys, just be bullish about 127.89, which is this level here. Trend is bullish above here, and we clearly moving upwards. I'm not sure if it's going to go all the way up to the high. Fortunately, it is what it is. We can grab 50% of profits here, and I think people that are not in, haven't bought this, gonna wait for a little pullback. What's also interesting, Euro USD and GBP USD are bullish. So when both are, you don't always have to wait for both to be at the buy area, but if both are in the buy area, then that obviously makes things much more interesting. As for the dollar yen, unfortunately, this one is so close to trigger that trend funding level. So the October 23 low is pretty much where we are. We touched that level. You have this level here, which is the 22nd low. It's gonna make some adjustments here, unfortunately. If you bought, there's not too much to do, unfortunately. I bought this one yesterday on the news. So yesterday, you might remember this. Let's take a step back. Big inverse head and shoulders, left, right shoulder, head, break here, turns bullish. And then yesterday we had the statement. So we had the statement, and I looked at that and I said, you know what, that statement is bullish. The Federal Reserve is going on hold. They're not gonna increase interest rates anytime soon. Also cut interest rates anytime soon. And just before that, the likelihood of a rate cut in the December meeting was at 26%. So I said, I mean, that's just 1 month from now. Oh, sorry, well, not 1 month, but it's in December, so it's 2 months. So clearly, they're not gonna cut again, as these 26.1% probability is indicating. So I bought a bit at 94, which was here. 94 was here, and market went all the way up, and it was looking good. At one point, it looked like we were really gonna break out. And as you know, that inverse head and shoulders has a target of 112. And then when it came down, I said, this doesn't feel right. So I just jammed the stop just down here. And I lost about 20 pip on that. And then since then, I didn't do too much. I haven't done nothing actually since yesterday. And looking at this today, my original idea was to actually buy here. Because if this would had a normal descent, then it would have made sense. But now, because everybody is panicking over that Bloomberg article, it's under severe pressure, and it's probably not a good idea to buy here. You see the market just sliding and sliding. We have no bullish candle on the 30, no bullish on the 1 hour, and definitely nothing else bigger. So I would give this a bit of a rest. And you know what probably is going to happen? It's probably going to go down a bit, and then it's probably going to go up. So I wouldn't get too excited. Let's see what happens. If it tomorrow or later it really clearly looks like it's going to establish itself below here, then I'll probably go down a bit, and then probably up, and then maybe a little bit lower. But unless this is the beginning of a massive distrust and a total collapse of the phase 1 trade deal, then what's probably going to do is going to go down a bit, and then it's going to go upwards again. So you still have that little uptrend, which is going to hopefully support price here. So I wouldn't get too excited. Maybe give this a bit of time unless you're very eager to buy here for tiny risk. But it's so easy for the market just to go down and then go up again. We usually don't cover it, but let's cover it here today. So this is the Aussie dollar versus the USD. Very, very sensitive to the whole trade war situation. And you had a double top here, which was capping price. And it's also almost a bit like a double bottom. So you have this big range, and the difference between the low and the high is 222 pip. And the market took out that level yesterday, and now the trend is short-term bullish. So I reckon that around where we are, maybe a little bit lower at 68.79, this market may turn higher. And this is a better setup if you want to bet against the whole news that came out, because this is more bullish than the dollar yen is. Dollar yen is definitely bullish, but it's not as bullish. Crude oil prices. So last few weeks talked about buying here, and then I lifted the buy area a bit, and here's what I think it's time to focus. It's obviously down a little bit. It may easily go down a bit more. I think 54 would be a very good opportunity, and then from here probably go back up into the middle again. Gold prices trading sideways again, and they're within that range, and I'm neutral within this range. And with the non-farm payrolls looming tomorrow, there's no real reason to get, very heavily involved here. I'm treating this like a bit of a rectangle with a break to the upside, turning things bullish, break to the downside, turning things bearish. As for the S&P 500, the idea here has just been to buy here, and I had this slightly lower yesterday, and we pretty much missed that entry. I think if it does revisit that breakout point at 3,021.8, I think some people might buy here. I think it makes a lot of sense. This goes down a bit and then upwards again, and we'll hit this live level here. But then if you look at this from a bigger picture perspective, I'm interpreting this as a big ascending triangle. So you have that line here, and then you have this trend line goes from here to here, and the difference here gives you, that's 7%, more or less 197 points. It's 189 points. So that is the longer term target. So we'll see if this plays out. A lot of markets are doing the same, so that correlation is good. Fortunately, there's nothing guaranteed. The only thing we can control is the risk reward ratio and entries and stuff like that. German DAX. German DAX just hit that buy spot. We talked about this yesterday already. We hit that buy spot, and so far it's reacting the way I wanted. Might be a little bit more of an effect of this thing. It's not a big, I don't really understand exactly how people think sometimes. I personally don't think that we were gonna get even this phase one deal. I didn't really believe in it too much. I have a neighbor of mine that works in a family office, and he is from mainland China, and he reads about a lot what's going on over there and talks with investors and knows quite a lot. And his view is that, and I shared this one with you before, is that they're gonna try to stall this. This is a negotiation. They're gonna try to stall some 10 years or something like that to be able to continue their current model, because right now the Chinese economy is still very dependent on the export sector. So realistically, they need to build their own economy, the service sector, strong enough that they don't have to depend on exporting. And this is already happening, but it will probably take more time. And as I said before, a lot of the this sort of models that these countries have, all countries have had that, more or less. South Korea, for example, Taiwan, they had built up their economies with some very rigid rules on what you can import and export, and they build up their economy. Even Western economies, we have the guilds, like 200-300 years ago. You have certain companies that had monopolies, and they had all of this to build up your economy. And why do they do that? Well, it's the same as when you would raise a child. You don't just, they can't take care of themselves, right? So you need to nurse them. You need to help them. You need to take care of them until they are mature enough to stand on their own 2 feet. And even after that, my son can stand on his own 2 feet, but he's 19 months, and you still need to take care of him for many years. So it's the same thing here. This is what China have been doing, and I personally don't think it's necessarily super controversial, but in the longer run, there are some controversial parts in their way they operate. But it's not unique to them, and we need to understand where they're coming from. So what does this mean then? That we're probably going to see more volatility and problems like this going forward. That creates opportunity sometimes. Sometimes it just blows our position straight out of the water. Okay, let's see if you guys have any questions. So there's a question here. How about dollar Swissy? Is this significant sign to short? Last time I checked on dollar Swissy, it was trading sideways. So this is dollar Swissy, and the dollar Swissy, I wouldn't sell it here because we're within a range. So if we look at the technicals, they're holding up for now, and as long as you trade above 98.31, this is overall a bullish trend. You got another low here. So you got these two levels what people having. If we take this level out, then yes, you can start to turn bearish if you wanted to. If you take out 98.31, might go to 97, 96, and maybe even a little bit lower. But this, what it's telling us, is actually here to buy. We'll see how much this article influences things. Right now, obviously, it's a bit of volatility, but it might actually just settle, because it's just a rehash of. It says here, the Bloomberg report says that China is causing doubts about reaching a comprehensive long-term trade deal with the U.S. So because it's second-hand sources, it's very easy for anyone to come out and say that that's not correct. So it can have any comment and then it changes. And technically here again, we just above the high, so this is not the time to sell. Risk-reward ratio wise, it's actually a good time to buy. Okay, so we're gonna wrap things up, guys. I want to thank you so much for watching, and Main West, I hope you have an amazing day, and everybody else that is watching. So I'm back on the regular schedule, which is 9:30 official time. So start 9:30, sometimes 9:40. The best thing is just actually to follow us, the ATFX channel, because that gives you notifications when I go live. That's the easiest thing, and that's it. And if you're watching this, I do need your support, so do like the video before you leave. And if you can, if you're on Twitter or anywhere, just share a link. If you have a blog, share it as well, because all of that helps to build this presentation every day. If you have any ideas as well, the website is under development. If you have any good ideas or anything, just ping me via AlexFX00, and we can see if we can create something that you might be missing. Have a good day, guys, and happy trading, and be careful. Tomorrow's snowstorm perils. It's gonna be crazy probably, and then after that, a bit boring, but hopefully we get something nice to work with. So next week should actually be good, so you bear that in mind. All right, guys, have a beautiful day, and I'll see you guys tomorrow. Thank you, and bye.